Hello, everyone, and welcome back to the Real Estate Rundown, put on by me, Jessica Trizuto, also known as Realtor Trizuto, across all of the social platforms. So if you are listening, don't forget to add me on Instagram at Realtor Trizuto, and let's get on with the show. Okay, today we have episode 6, and I'm going to be talking about some of the common myths that I think are in our community about home buying and why I think it's a hard topic to talk about sometimes. And when we get down to it, I don't think a lot of people are comfortable talking about money, and I want to change that conversation. So before we get into the actual content of the episode, I wanted to make sure my listeners know about the mobile app for your phone. I have a Keller Williams mobile application for your phone. And basically, it is an app that you can pull up, and let's say you're in a new city and you're like, I could live here. The shopping is nice. Let me see what the schools look like. Let me see what's for sale. You can pull up the app and search nearby open houses, nearby homes for sale. See what the price looks like. So when I click nearby homes, what pops up? It tells me if it's for sale, how far it is away from me, how many bedrooms, how many bathrooms, pictures. I like to use this as a reference when I want to look up a property. Maybe you find a property's address and you want to know more about it. Open up your app, type it in. It recognizes you, it knows you, and it also helps me as your real estate agent to know what you are even interested in. So if you are interested in getting this app on your phone, there are a couple ways to do this. You can log in to the website online, and I'm going to give you the URL. It is www.app.kw.com. So www.app.kw.com/ KW2B as in boy, QRTAT. And if you go online to that website, it will give you these instructions. Now this part might be easier. The other option to get the app is to text KW2B as in boy, QRT as in Tom, AT as in Tom, to the number 87778. So you're going to text a phone number, but the phone number is 87778. And then in the message part, you type in this code, KW2BQRTAT. And then if you do that from your phone, it will automatically, give you the link so that you can download it. I like using this Keller Williams website as opposed to any other Google search engine that you can find. I feel like the information is more reliable as it's backed by your Keller Williams agent, and I'm here to help. So I hope you can go and download the application. Now, if you are someone that likes to search more on the internet, that's okay too. I have a website. And this website, you are able to create a login and save homes and look at school ratings. And that website is a little more simpler to get to, I think. It's realtorjessicatrizzuto.kw.com. And I'll link these show notes in the bottom if you'd like to go to it, and I will spell it out one more time. My website is realtorjessicatrizzuto.kw.com. That's REALTOR JESSICATRIZUTO.KW.com. Now, I'm sharing my tools with you because I feel like some clients maybe are not aware that these resources are available from a trusted agent. I feel like the internet has a lot of information. And I've had clients come up to me or call me about a property they saw online. And then when I go to research it in the MLS, the property has been sold, let's say 5 months ago. Well, that picture and the information about the home are still going to be used by other companies out there so that you'll click on them. And if you are interested, and let's say you start clicking and you want more help, they'll, I don't know what they will do, but as a realtor, I will sit here and say, hold on, where did you find this information? Let's get you set up on my mobile app and my real estate website backed by a Keller Williams realtor, because this information that you found online is not accurate. So I hope these tools will help you in your search and just to get you more acquainted with your market. Maybe you're thinking about buying. Maybe you're thinking about selling. So the reason I bring that up is because when I was getting ready to sell my home, I wanted to know what the other homes were doing in my market. So I would use my Keller Williams app daily and check my neighborhood. Did any new homes come up for sale? If so, how much? Was it bigger or smaller than mine? Because the other homes in your neighborhood affect yours. And I know sometimes home sellers don't want to hear that. As I'm selling my home and I put $100,000 of work into it, so I'm going to sell it for $100,000 more than I bought it for. But if you look at the other homes in your market, and I mean, we can get it as close to exact as we can in terms of square footage, year built, bedrooms, bathrooms, is there a pool, things like that, HOA, no HOA, and you compare those, and then you're like, oh, my home is worth this much money, and it's not the number that you calculated on paper with your additions. So just keep that in mind too when you're going to rehab your own place. And how long are you going to stay there for? If you plan to only hold the property for a few years because you're wanting to trade up and gain equity, then maybe you don't want to spend all this money because you know that that's not your forever home. Now, there are some small fixes that you can do while you're there to ensure the upkeep of the property. Hey, you might get a couple extra $1,000 if you paint the walls, or landscape the front yard like very minimally, and it won't be at a lot of money out of pocket for you, but the home buyer who is going to buy it, they might pick your property over someone else who maybe didn't spend the time to fix up the front of their yard. So just a few things to think about. And there's one more resource I wanted to put in here, just in case anyone was wondering. If you're going to sell your property, one of the first things you do, or that a real estate agent does, is put together a CMA. And we call that a CMA because it's an acronym for the phrase or the words comparative market analysis. So I'm going to do what I was talking about earlier and take your home and all the details and parameters and search within your neighborhood. Now, this is like within a half mile or maybe a mile. That's pretty wide, depending, because neighborhoods change, So let's say we do a half mile of all the homes that have been bought or sold within the last 6 months. And if there are no homes, then you can widen the parameters a little bit, maybe go out a mile or go back 7 or 8 months. You don't want it to be back too far. And also you don't want it to be like in distance relation. You don't want it to be like 5 miles away, where maybe that neighborhood is different in terms of value. Okay, let's get into our first myth. So a lot of people, when I talk to them, I say, oh, are you getting ready to buy a house or sell or whatnot? And one of the things they say is they're saving for a down payment. Well, when you think about 20% of a house, and let's just say the house is worth $300,000. This is the home that me and my family want to buy. I need 20% down to even put my offer in. So that means that I need to save, me and my family have to save $60,000, 60. So why even start? I try to save a little bit and something happens to my car and I'm discouraged. But no, $60,000 is needed on a $300,000 house if you are going conventional. So there are different types of loans that you can get on your property depending on your situation and depending on who you are, because the government has put together some programs for people in the military, or if you're in an area that's maybe not as highly populated. There are loans out there that have 0% down payment. So those two, if we want to talk about the 0% down. So the number one big one is a VA loan. If you have served in the military or you are currently in the military, these loans are available to you, 0% down payment. And the lender that you speak to, depending on the lender, they might have different versions. So talk to a lender today, ask them what the VA requirements are if you qualify, or what do you need to do to qualify. I have a sheet from Mortgage Express here in Palmdale, California, and it talks about the VA loan. It says 0% down, eligible veterans get 100% financing, lower interest rates, very low mortgage insurance, limited closing costs, and a minimum FICO score of 580. So there might be some credit obligations that you have to meet and things of that nature. But if you think about it, I am coming in with no down payment. For me, I'm like, whoa, what a helpful hump to get over, because that's the whole reason I wasn't even starting to look at homes. And I just want to educate everyone and let them know. And maybe someone in your family is in the military or is a veteran and they're renting. So let's educate everyone. Tell people about this. Or maybe if you're interested, reach out to me. I'll get you in contact with a mortgage lender. I've been working with Keller Mortgage, and I have a Southern California contact who I call now and I refer my clients to because of their 0+ loan program. And for those clients who decide to work with a Keller Williams agent, you also have access to Keller Mortgage. And this 0+ loan I like. It's designed with home buyers in mind, and we're able to cut a lot of the origination fees. And when you first book your appointment with a Keller Mortgage lender, the first thing they do is order the appraisal. And at the end of this, and I'm trying to figure out where this $1,000 comes out of, you do get $1,000 off of your closing costs in the end. And they're able to offer this with the low rate and just help my clients close faster and get into their homes. That's what it's all about. Well, that's my little side tangent on Keller Mortgage. But back to my myths about down payments. And there is another program that offers 0% down payment. And we call those USDA loans. So the U.S. Department of Agriculture, USDA loans. They offer 0% down payment. Now these requirements have to deal with where your home is located. So I did a quick search. And basically you can search by going to Google and typing in USDA, so United States Department of Agriculture loans, California, or whatever state you're in. And so basically there's an income requirement, meaning you can't, meaning there's a limit. Like if you make too much money, you might not qualify, which is a good problem to have. So, and the other restriction on USDA loans are the city that they are in. So I sent out an email to my loan officer yesterday, just like, hey, do you have any in-depth information? And he basically sent me the link to check the city and also your income requirements. So I'm in the high desert and I did a quick search of Yermo, California, and you are able to get a USDA loan for that city. So as long as your income requirements meet, then you can apply for this loan that has 0% down payment. So the pros and the cons, you weigh them back and forth. If your goal is to get into a home as quick as possible, just to start building up your equity and your net worth and #invest in yourself, as I always say, then maybe you can attain a USDA loan, but then you might have to live 20 minutes away from where you work. So for the short term, you might have to live far away just because you wanted the ability to get into this home. And I just don't want anyone to think that they can't. So let's talk. I'll get you in contact with a loan officer. My loan officer also has ways of getting you in contact with credit repair, because maybe we don't know what to do. We don't know what the first step is. And you just want to get out and pay down debt first. And if that's your goal, then let's create a plan. I am here as a resource for your community and for your real estate needs, but also for your money wise. Like money wise, what I mean is like your money financial education, or your thinking around money in general, because I don't want us to just be afraid anymore. And why, if you want to own 5 homes, then you can do that. Maybe you want to have 10 years to take, every 2 years buy a home. You can do that. Be an investor. And the sky is the limit. But maybe right now your goal is 1 home. I want to live in a home that I bought. I want to pay the mortgage. I want to be paying myself every day, every month, and not paying this renter that I can walk away and go, where did my $16,000 go this year? It went to that landlord's pocket. So reach out. Let's talk. Let's talk about money. Home ownership is attainable. So we have those 2 loan programs, 0% down. Well, maybe you're thinking, well, Jessica, I don't qualify for any of those. Well, that's okay. I didn't, and I was still able to buy a home. So let me break it down to you and tell you how I did it. There is another loan type out there called FHA. And with an FHA loan, you're able to come in with 3.5% down. So let's say, going back to our prior example, the house that we want to buy is $300,000, and you are saying, okay, the house I want is $300,000. I need to come in with 3.5% down payment. That is $10,500. So this number is way less daunting, in my opinion, than the $60,000 prior, which is the 20% down. So you're dealing with these numbers that are like, okay, I can have a goal to save $10,000. And it doesn't matter how long it takes. It matters that you set the goal and that you take steps now to work on that. Focus on the process. What are the steps I need to save $10,000 and get to work? And it might take sacrifices. But I think if your goal is to own a home and to be a homeowner, you're going to be so much more happier in that space. I can go home and I can call this my home. I own it. So in relation to the down payment amount, and if you're thinking, you can even drop the purchase price. So let's say you want to look at homes that are worth $200,000. Well, 3.5% of $200,000 is $7,000. Can you save $7,000? And ask yourself those questions. And then maybe you can get the FHA loan to get into your home. So the pros and cons. So the cons of an FHA loan are that you have this insurance called PMI, premium mortgage insurance, I want to say. And so basically, if you don't have the 20% down yet, you have to pay a mortgage insurance fee. And mine was about, I think, $132 each month, and it's included in the mortgage payment. And it sits there in an FHA loan for the life of the loan. And the only way to get rid of your PMI, so let's say you've owned it for a while and you're like, I already have 20%, paid into it. It doesn't just come off like on a conventional loan. You'll need to refinance. So when you get to that point, you can consult your loan officer or your realtor or me, and I can help consult you on refinancing. Because at that point, if you have up to 20% paid into or down, then in relation to the value of your home, you may be able to go to a conventional loan, because you just needed the FHA loan to get into the house. And now that you are past the 20% needed for the conventional loan or refinance, you can get the conventional loan. The PMI drops. You no longer need mortgage insurance because you have skin in the game, as they say. You have 20% paid off your money. So I just recommend paying attention to all the different loan types so that you're not scared of jumping in. And also at this point, look at the rates. If the mortgage rates are higher than when you got your original loan, you may not want to refinance just to take off the PMI because the rates are higher. So just look at everything and your picture on paper, the rates they're offering, and then maybe every year you kind of check in. Talk to a loan officer. Say, hey, do I have the best mortgage for my situation? And you might be saying, well, I'm going to be living in this house forever. This is my forever house. So how can we refinance the loan today to reflect that goal? And maybe it's getting a whole nother type of loan, depending on your situation. I mean, if you're going to be selling in the near future, refinancing is not really a good option because it does cost money. And whether they add it to the loan that you pay back or you have to come out of pocket. We want to make sure before you spend that extra money just to get the PMI taken off, is it going to be worth it? So just depending on your situation, that's what I advise. And I'm pretty sure I haven't even touched on half of the loan programs because I'm a real estate agent, Realtor Jessica Trizuto here, and I familiarize myself with the loan types just so I can be a resource. But to get your personal answer, your personal questions answered and your situations, I don't personally look at your bank statements and your job history, but a loan officer will. And it kind of gives this space, separation of that's their job. They're in charge of making sure you get the best loan. And then when you're done talking to them, you come back to me and they tell you that you qualify for, let's say, an FHA loan for 3.5% down, and you can shop up to an amount of $250,000, 250. Now with this in place, now we can go shopping. Now I can start sending you homes by email. Oh, Jessica, I like these 3. Can we go see them on Saturday? Yes, because I already know you've spoken with a loan officer and this situation is going to serve you in your financial future, build your equity up. You're going to become a homeowner. And then I'm happy. And then at the end of the day, I hope you guys are happy too, if that was your goal. So that's what I'm here for. I'm here to help. One more thing I wanted to mention about this was the more money you can put down lowers your monthly payment. So depending on your situation and the loan type you get and how much money you decide to put down, your monthly payment will be directly affected. So I think just going in and having this number of, okay, I want my mortgage to be $1,500 a month. PMI, no PMI, $1,500 is my limit for me and my family. Which loan type can we fit into this picture? And so I think the first question is just to ask to talk to a loan officer. Here's my situation on paper and in reality, because they may be different. And how can we get to my goal of owning a home? And one other loan type I wanted to cover on here was the conventional loan. And I think this is the one that we all know of or maybe have only heard of. And that's generally basically because it's the most common, I think. So you put down 20% and you basically get a conventional loan and there is no PMI insurance added because you have your skin in the game. You have your 20%. So this might be on your next home if you need some down payment assistance. And, I didn't even talk about this program. So after the conventional loan, there's one more I want to tell you about. Okay. I think I'm just going to keep remembering them as I talk on this podcast. So, are you a first-time homebuyer? Did you know that there are first-time homebuyer programs? Oh my goodness. Why didn't I start with this one? I crack myself up sometimes. Attention all first-time homebuyers. And I believe this number is 3 years. So if you haven't bought a home within the last 3 years, you are considered a first-time homebuyer. And check with your lender. And I'm going to double check my source too, because it's something that I think a lot of people might not know. Like if you've bought a house 10 years ago and sold it, you may be considered a first-time homebuyer. So always check the rules, always check the stipulations, because don't just assume that you're not a first-time homebuyer. Okay. Well, what is this? This is CalHFA. And this loan type is down payment assistance for first-time homebuyers. There is a minimum FICO score. And don't be afraid of this number. That just means that you have to pay your bills each month on time to kind of get to a place where you can qualify for this. And it says minimum FICO score of 640. And it doesn't mean that you have no down payment with this program. They cover 3.5% down payment as a second lien with only 2.5% interest. So they add another little chunk of a loan onto your house loan. So you're still responsible to pay this one back, but they are giving it to you at a lower interest rate and also allowing you to get into the door. Because yes, I still want the home. Yes, I still want to pay the 3.5% down payment. I just don't have it right now. So they add it to your mortgage. So maybe your overall purchase price might have to be a little lower, but again, the whole goal is to get in the door. So CalHFA, so conventional and FHA options available. And I think this program is the most under advertised because first-time homebuyer programs, and let's just say out of high school, okay, maybe out of college, and so let's say you're 23 and you're like a first-time homebuyer program as a 23-year-old might be advantageous. And as the college grad or not, maybe they're just a couple years out of high school and they're like, hey, I've been at my job for a while and I'm ready to buy. I have my 2 years of work history with the same job. I can show that I go to work every day and I can attain this loan and you don't come in, I'm not saying that you can get the keys with no money because there's a little bit of expense involved in purchasing a home with a home inspection. You want to make sure that another person can come in and say, yeah, this home is amazing and I would fix this, this, and this, or this might break down in the future. And that's just to cover your butt, essentially. Like, you don't want to invest your money in this house because it's a great deal and then find out that you have to replace the roof next year. Well, the roof might cost you $10,000. So ask these questions. When was the roof replaced? Or the inspection might come back and say that the roof needs to be redone within the next 5 years. Well, you use the information in the inspection to let the seller know, hey, I really like your house, but it looks like your roof is going to go out in the next 5 years, or our roof for the time being. Is there any way you can lower the price? Because I want to buy this house, but I'm going to also have to pay this for a new roof. So maybe they can come down on the price a little bit. And it gives you time to save. Hey, I'm going to need a new roof in about 5 years. So I'm going to put a little bit of money aside each month to go towards my repairs. And if you have a repair in mind, a specific repair in mind, you might have an extra fund just for that. Because let's say you're a homeowner and let's say month 2 of owning your home, your budget is going to be different from when you were renting. You may have $100 a month going towards a home maintenance fund. And all that is like, oh, if the light bulbs go out, I know where that money's coming from. I have it budgeted $100 a month to go towards my home maintenance. And then let's say it'll accumulate, and then you can start being strategic about it and say, oh, yeah, that water heater, it gets hot most of the time. So I know that's, next on my list. So you might have that in mind. And when the fund for your home maintenance gets large enough, then you can purchase the water heater. And then again, over time, it will accumulate, and you make sure you take care of your investment, whether you're going to sell it or if that's going to be your forever home. You really want to take care of it. So reach out to me. Let me know if you have any questions. I can get you in contact with a lender depending on where you live. Or if you are here with me in the high desert, then depending on your need. Because I'm just cracking up right now. I can't believe I didn't start with, or I almost forgot to mention, the first time homebuyers program. And how many people do you know that would benefit from this information? Or maybe it's something you learned. Reach out to me on Twitter. I'm at Realtor Trizuto, and let me know if I taught you something or if you learned something, or share with a friend who maybe has never bought a house before. This information, I feel like, should be available to everyone, to people in high school, to people in college, to people in their 30s and 40s. And it doesn't matter. What is your goal? Write it down, and let's figure out the steps to get you there. Okay, I did want to clarify about the CalHFA requirement for being a first-time homeowner. So, if you haven't owned or occupied your own home in the past 3 years, then you are considered a first-time homebuyer in California. So, if you have not owned or occupied your own home in the past 3 years, then you are considered a first-time homebuyer in California. So that may open up some doors for some of you who may think that first-time homebuyers are considered first-time only once, and that is not true. You can be considered a first-time homebuyer on paper if you have not owned or lived in your own home in the past 3 years. So for whatever reason, if you had a break, if you've been renting, hey, guess what? You now have the ability to attain this loan, that the title alone, First Time Homebuyer Program, you may write it off just by reading it. So now you have the knowledge, and now you can go ask your loan officer, hey, what options are available to me? I just found out I'm a first-time homebuyer in California. So here we go. The other thing that I wanted to clarify was PMI. PMI, it stands for private mortgage insurance. And I didn't describe why we have it. So basically, PMI insurance, because you don't have 20% down yet, you don't have your enough skin in the game, as they say, then the PMI you're paying each month goes towards ensuring the lender gets paid. So for whatever reason, if you drop out of the deal, you can't make your payment, the insurance is in place to kind of cover the bank, and that they will still be entitled to their money in case you can't pay. But I think PMI is there for us as home buyers in cases in which we do not have the 20% down. And things happen. Life, things in life happen and things have to change. But with the intention of, hey, I don't have 20% down yet, I will get there. But I do have to pay this private mortgage insurance in the meantime, just so that, nobody kind of gets screwed. And that's kind of a hard way to put it. But if the banks did what they did in 2007 and just give loans to anyone without checking and making sure, and intent and work history and ability to pay. We want to make sure everyone, like, this is a good choice for the buyer and the lender. The lender's, in a sense, lending you $300,000 to live in this house. And until you get to the point where you have the 20% down, you do have to pay this little insurance premium. And I just wanted to explain why, and the correct term is private mortgage insurance. So just a few things to clarify from what I've already spoken on. But I hope this podcast has been helpful to everyone listening. And please let me know your feedback. You're able to leave an audio message, I believe, if you're listening on anchor.com. And I can play them back. So if you have any questions or any comments, please, go on my Facebook page, add me, write some comments. Where else am I? I'm on LinkedIn. Check me out, and Jessica Trizuto. I post some fun things on there too. I created a TikTok account. It's not just for the younger generation. TikTok, and I might do a little tangent here, it's basically a video editing software program. And unlike Instagram and Twitter, and Facebook, I guess, where you have to kind of post, like I have to create something to then post, you can actually on TikTok create content. And I think for me, being the age that I am, there was a lot of talk about, oh, don't go on TikTok. That's for 10-year-olds. That's for 12-year-olds. And yes, that demographic is on there, but I'm able to find people my own age and see the creative things they're doing with the music. And you can add text words. And you can change the timing, like only show this word when this lyric pops up, and just having that creative ability is fun. So if you have not tried out TikTok, I suggest you create an account and go see what everyone's doing over there. And if you have a business, promote it. For example, like let's say you have a car detailing service business, and you can get on TikTok, make cool videos of like, oh, look, I waxed this car today, or look at these shiny rims. And you're basically giving your business exposure. And so I highly recommend anyone, if they have not yet, to go on TikTok and see how it can promote your business and see. Oh, Lord. So go ahead, check me out on TikTok. I'm also at Realtor Trizuto, and go see what everyone's doing and creating content and adding music. I think that part is fun also. Have a great day, and let me know how I can help you if you're looking to buy or sell. I'm your girl. Hashtag Realtor Trizuto. Hashtag invest in yourself. And I'm here to help. That is all for episode 6. We got into one myth, which is, help, I don't have 20% down to buy a house. Solution? Check out the many other loan programs that are offered to homeowners that don't require a 20% down payment. So share with a friend if you think they would find this podcast helpful. You can screenshot the podcast. You can share it through your podcast app and share it with a friend. Who do you think needs to know some of these distinctions? And let's get more homeowners investing in ourselves and building equity, and we can design the life we want to live. All right, I'm signing out. Have a good day.